This morning, before Wall Street even wakes up, Taiwan Semiconductor manufacturing company is already writing the next chapter in its growth story. In pre-market trading, TSM shares are changing hands around $210.50, roughly 1.7% above yesterday's close, after the company released a May revenue report that left little doubt about where the momentum is heading. The headline figure is impossible to ignore. May sales reached 320.52 billion new Taiwan dollars, a jump of nearly 40% versus the same month last year. Stretch that lens to the first 5 months of 2025 and the numbers look even more dramatic. NT 1.509 trillion in consolidated revenue, up almost 43% from the year-ago period. Behind those totals sits unrelenting demand for advanced silicon that can drive the current wave of artificial intelligence applications, data center upgrades, and next-generation consumer devices. By staying at the cutting edge of process technology, TSMC has positioned itself as the fulcrum of that supply chain, and today's pre-market tape is simply confirming the market's recognition of that role. For investors already on board, the latest pop crowns a 12-month run of roughly 26% and a 5-year climb of more than 265%, performance that handily eclipses the broader Taiwan market. Even after that ascent, the stock trades at a forward price-to-earnings multiple just north of 21, a level many portfolio managers still view as compelling when set against peers of similar scale. Fundamentals underpin the enthusiasm. Profit margins hover near 42%, and return on equity sites comfortably above 31%, reinforcing the notion that growth is coming without sacrificing efficiency. Analyst targets stretch from the mid-160s to the mid-260s, with a consensus around $224 that implies additional upside, yet today's market capitalization, now over $1 trillion, reminds us this is already a heavyweight. Put simply, TSMC's latest revenue beat signals that AI tailwinds are not merely a theme, they are translating into hard numbers on the income statement. As the opening bell approaches, the stock's early rise suggests investors are prepared to keep rewarding execution, scale, and the strategic advantage that comes from being the world's go-to chip foundry.